Good evening, everybody. It's Adrian Hill here, and I'm here to have our second webinar on the Australian government's economic response to coronavirus. Can I just get everyone or someone just to throw me something in the chat box to let me know you can hear me okay before I actually get started?
Turn mine down.
Oh, cool. Thank you, guys. Cool. Also, I'll get started then. So the webinar today, I had a webinar last Wednesday co-hosted by Jesse Green, and I'll be brutally honest, I massively underestimated the questions and things that were going to be thrown my way. So in the end, I didn't get anywhere near as much covered as I wanted to last week, and I had to rush some stuff. So what I decided to do was to run another webinar tonight, and tonight's webinar is going to be on two main things. It's going to be on the PAYG tax stimulus that the government's announced, stage 1 and stage 2, which will help with some cash flow. And the next part of it's going to be some admin measures that the government has also announced, not necessarily directly as part of the stimulus, but I know is on the Australian Taxation Office's website as the things they're going to allow, which again is going to help free up some cash flow. And then I'm going to quickly go over the depreciation rules again and a couple other slides. That's tonight, and we're going to have stop at periodic times and have some questions, okay? And then Wednesday we're having another webinar, and that webinar is going to be about hosted by myself, but more so spoken by Melissa Mann. And I'll cover that in a bit more detail in one of our slides. But basically, she's going to talk about the financing options that are available to potentially help free up cash flow. So that I'm hoping that by the time you get through tonight's webinar and Wednesday's webinar, and Wednesdays will be at the same time, and you will get a link sent out to you as part of, at the end of this process of this one, you'll get a link sent out to you, I think, tomorrow to register for that. So by the end of today's webinar and Wednesday's webinar, what I'm hopeful is that each one of you out there has got a pretty good idea about the general rules that between the government and the tax office and the banks will be able to, you'll be able to access cash flow to help you survive in the next, short period of time. And pardon me. And then from there, what our plan is, that at least will give you some rough parameters that you can think about for yourselves in your own situations. And then we're going to get in touch with each of you towards the end of later this week or early next week to start having some one-on-one discussions with each of you. And those discussions will be purely about applying specifically to your individual situation or circumstance, the rules that we've covered, or the options that we've covered in tonight and Wednesday night's webinar, sorry. And part of that process will be, part of that discussion process will be, but both before, during and after that chat, will be analysing and working out how much you need both personally and business-wise to survive in the immediate short-term future to get you through to come out the other side. Okay, so that's it in a nutshell. And we're finding, I'm doing it this way because I'm finding that this is probably the most effective way of giving people general knowledge that they can then start to mull over, and then we'll apply the specific knowledge. So it gives us some leverage and saves you guys some time and us some time in the bigger picture of everything too, and most effective overall. And most effective in terms of dollars for you guys, get the most effective dollar out of your situation. Now, let me start on the slides. I'm only going to take questions at the end of specific targets. I will say one thing, because something's come up fairly early. I'm not going to be covering anything on JobKeeper payments or anything like that. I know there's some stuff that's been announced today. I have not had a chance to look at it. So I will endeavour to cover whatever's been brought out today on Wednesday's session, okay? But I'm keeping to those main targets, because for me, what I wanted to primarily focus on was getting you guys to at least get an idea of what cash flow measures are available to help with your business from a business point of view. The job seeker payments and other bits and pieces, it's about other things. So we'll just stick to that for now, and anything that pops up today, we'll try and cover on Wednesday, okay? So anyway, I'm gonna get started. Oops. So after what we spoke about last week, what I thought I would do was I developed an Excel spreadsheet to help people understand and do a bit of what if analysis for what they're able to get from a PAYG. Because with the stimulus, basically it's broken down into a few different areas, but the first area I want to focus on, which I mentioned at the start, was about the PAYG tax, which is another word. I still call it group tax. I'm a bit old fashioned, sorry, but it's basically tax you withheld from your employee's wages. There's a cash boost from that, which is but there's two stages. There's stage 1 and stage 2. I'm going to cover, I've written a calculator to help do a bit of what ifing and to help, hopefully, which you'll all have access to because it was part of the download we sent you, is you're able to access the Excel spreadsheet. I don't really want you to fiddle with that now. What I really wanted you to do was I'm going to take you through how to use it and some little nuances, so then you can potentially play with this when outside of this time, when you've got a bit more time, and apply it to your own personal situation. So what I've got on the screen now is I just ran a report off Xero. Now it's a made up report. I just wanted to show you how to get it out of Xero, right? So you just go into accounting, reports, payroll employee summary, hit all employees, date range, and then the date range, obviously I've chosen for my date range, 1st of March to the 31st of March, and then hit update. And then that comes out. So effectively what this report shows me, which is the same report you could use for your what ifing with your business in relation to the Excel spreadsheet I'm going to go through in a minute. It has the employee names down the side, the gross earnings, the tax, any super, and the net pay for the period for the company that you're working on. So this report would be all you need to do your what ifing. Now, I'm now going to go into the PAYG tax calculator. If you can just bear with me, I'm going to jump out of the PowerPoint. Just hang in there for a second, guys. I'm not exactly the quickest around this Zoom product. So what I'm going to do is hit stop share, then I'm going to go here. Where's Excel? Oops. Share screen. Where's Excel? Where's the Excel? That's not it, is it?
Yeah, that was it.
No, it's not. Sorry, guys, just bear with me. Some technical issues at my end. Where is it? Where's it gone? Sorry, just bear with me. I'm having trouble getting this spreadsheet open. Hang on a second. Share screen. That's it there. Okay. Now you should be able to see this spreadsheet.
Yeah.
Sorry, guys. I got my old plates on today with this, but anyway, all good. So what I wanted to go through now, what I've put in this spreadsheet, and I've deliberately done this, and I'm going to go through this again because it's super crucial to your understanding. I've put some of the key parameters into, as you can see down the bottom of this spreadsheet, I've got monthly tabs and quarterly tabs, right? So I'm just going to concentrate on monthly. The key spiel that I've got in here, you can look at this more closely on the Excel side at your own end when you've got a bit more time. But I put a little spiel in under both because it's pretty much the same, but it's slightly different on one or two things. But I just want to go over this again. I want to go through the stage 1 tax-free payment for monthly payers. Okay, I understand both of these stage 1 and stage 2 payments are tax-free. That's important to know. So basically, who's eligible? Small and medium-sized businesses with turnover under 50 mil that employ workers are eligible. Eligibility is generally on your turnover from the prior year. Now, the payment you're going to get from the tax office is automatically done. It's an automatic credit based on the activity statement system from the 28th of April upon you lodging your upcoming activity statements. Where these activity statements and automatic credit put you in a refund, the tax office will deliver it, but it'll take up to another 14 days to get the refund. Now, eligible employees that withhold tax will receive 100% of the tax withheld up to a total maximum of 50 grand. And eligible employers that pay wages will receive a minimum of 10 grand, even if they're not required to withhold any PAYG tax. Now, the payments will only be available to people who were active employers as of the 12th of March, 2020. So I'll keep going down here. The eligible periods for monthly payers are March, April, May, and June, and the lodgement due dates are 21 April, 21 May, 22 June, and 21 July. Now, to provide a similar treatment to the quarterly lodgers, the payment for monthly lodgers, the March activity statement, which as you know is coming up now because it's the end of March tomorrow, the payment for monthly lodgers for March is actually calculated at 3 times what you lodge for March, which then expands it to effectively be 3 months, which brings it in line with the quarterly payers. Now, if you're only eligible for a $10,000 minimum, you will get it on your first lodgement, whether that be for the month of March or the March quarter, and from the 28th of April. Now, something I want to mention before I go into stage 2, because I've had numerous conversations about this, and it's only been clarified since last Wednesday's webinar. I want to bring up the integrity rule. The integrity rule is crucial because eligibility for stage 1 and stage 2 payments is subject to an integrity rule that is designed to stamp out artificial or contrived arrangements that have implemented to access these measures or to improve what you get from these measures. In particular, if you as an employer or an associate of you enters into a scheme solely to obtain or increase the amount payments you're going to get under stage 1 or stage 2, the employer would not be eligible for any payments for the relevant period. Now, I've had a few general conversations in the last few days about this. What I reiterate here, I get that our creative juices flow and we want to start going, oh, what can we do? Let's start paying a higher wage for myself or my wife, or let's pay one of our kids who's over 18 or whatever, right? There's lots of things your mind start going, which is natural. I want to draw your attention to the integrity rule because my understanding of it is, and we'll only know more in due course when we start actually rolling this out, right? But my understanding of it is they will look at your wage history when they're looking at the integrity rule. And if you do anything that spikes your wages / tax unusually higher than what you've done in the last 12 months or so, I will pretty much guarantee you will be getting questions about why, how, who you're doing it for. They want to dig a lot deeper. And I want to draw your attention to part 2. If you're found to be doing that, you will not get a cent, is how I read this. So my advice is keep everything consistent. Don't change anything drastically to try and meet these rules because it'll be obvious. And if it's obvious, it will be looked at. If it gets looked at, you're highly likely to not get a cent. So keep it consistent. Now, there's legitimate reasons why you may hire new staff, right? And that's okay. That's not a contrived reason. But if you, for instance, I've had questions about contractors becoming employees and, you know, employing husbands and wives and daughters and grandpas and fathers and all that sort of stuff, right? That stuff's off the table. Forget it. It's going to stand out like, you know what? And if you start getting questions, it'll fall apart in an instant. So the only thing that's going to stack up, is what I would call legitimate hires of legitimate employees who haven't been employed before. Okay, so I wanted to mention that because that integrity rule applies for stage 1 and stage 2. Now, stage 2, that's also tax-free. I'm going to go through the spreadsheet in a minute, okay? To qualify for the additional payment, you must continue to be active and employ and pay wages, okay? And once again, the payment will be an automatic credit and you'll be refunded up within 14 days. Now, the eligible period for the months is you got June 20, July 20, August 20, and September 20. And it's 21 July, 21 August, 21 September, 21 October. And each additional payment will be equal to 1/4 of the stage 1 boosting cash flow payment up to a total of 50 grand. Now, I'm going to go through the monthly one first, and then I'm going to go through and explain the quarterly one in a minute. So, for example, let's say here, for E's sake, my group tax or PAYG tax doesn't vary. I'm paying the same gross every month, just to keep it simple, right? So that 8788 there, basically, if you look at here, it's going to be 3 times that gives you that. So let me just widen this a little bit. Your cumulative tax-free payment for the first month is that, and the balance available is effectively the difference between 50 grand and 26,364, which is 23,636. And note in bracket, it's 3 times the March activity statement. So in April, your tax is 8788. In May, it's 8788. And in June, it's 8788. But let me explain something to you. In month 2, you get 8788, which you add to the 26,364, which makes a cumulative 35,152 with a balance of 14,848, which is the difference between the 50 grand and the 35, right? Straightforward. Next month, 8788, you add that on, your cumulative is 43,940, but there's only 6,060 left, right, to get it to 50 grand. So in the last month, 8788, if you go to the formula here, this is where I had to manually adjust it, which is why I wanted to show you. If I left everything as is, right, you would be $2,728 over. Now, remember it says maximum 50 grand. So all I've done there is just gone minus 2,728 so that I've got me 50 grand there and there's no more available. You'll see why that's important. Because when you get down to stage 2, remember from up above, it's 1/4 of the boosting cash flow payment up to 50 grand. So when you get to stage 2, as long as you still keep employing as per here and paying wages, otherwise you won't be eligible for stage 2, you get 1/4 of the 50 grand. So you get 12.5 for June, 12.5 for July, 12.5 for August, and 12.5 for September with the cumulative payments to the side. So that's how that works. But the bit I really wanted to target is if this is variable, you cannot go above 50. If you went above 50 in month 3, right, then you have to adjust what you get in month 3 to cap it at 50 grand. So it doesn't matter. It just gives you 4 months. If you don't go above 50 grand, then you're capped at 40 grand then. You know what I mean? Or whatever figure it ends up being here after 4 months, that's what you're capped at. And that flows directly down to here. 1/4 of what your cumulative is up there, you get down here. Okay. Now, in terms of rough cash flow, this is the other thing I wanted to mention. See how your March figure was effectively 3 times the 8788, which is 26,364. As you'll see from up here, they're not starting to pay things until the 28th of April, right? But remember, it's 14 days to get the refund. So I'm guessing that at the earliest, it'll be around mid-May before you see this coin. Because if they're not processing them until the 28th of April, irrespective of when you lodge, and 14 days to get a refund if it puts you in a credit. That means you could be pretty close to mid-May before you see the 26,364. And after that, it'll be about a month later each time. So that'll be about mid-June, mid-July, mid-August, right? However, you can add to that if you're eligible for stage 2. Remember, for June, you get 12.5. So for your June, what you're going to have is the 8788 plus the 12.5. You'll have around about mid-August, right? And then thereafter that, 12.5 will be about mid-September. That'll be about mid-October, and that'll be about mid-November, roughly. So that way you know roughly when the money's coming in, and you can know how to roughly work it out. I'm going to quickly go to quarterly. The only difference between quarterly and monthly is the eligible period is January to March and April to June, and the lodgement date 28 April, 28 July. And for the tax-free payment, it's April to June, 28 July, and July to September, 28 October. So if you come down here, same difference. If you paid 8788 for January, February, and March, as per your quarterly BAS, it'll be what's on your quarterly BAS goes in here, and what's on your quarterly BAS goes in here. The only difference is here, because they're only bringing it in now, they're not choosing not to factor in January and February. They're going to give you 3 lots of March, which brings it in line with a whole quarter, which takes it in line with the same as the quarterly. But it's the same thing. 26,364 gives you cumulative tax-free of 26,364. Balance available 23,736. If you've got another 26,364, once again, you're going to be over by your 2728, so you have to take that off. So the cumulative doesn't go above 50 grand. And the only other difference here is each additional payment is half of the cash flow payment. So in other words, if you've got 50 grand total there, for your April and June period, you get 25 grand, which is half of that. And for September, it's 25 grand, which is half of that.
So in June, you get 50.
Right? So for March, you'd get your 26,364 about mid-May. For June, you're going to get your 26,364 plus your 25. So that's about 51 grand. And that will come through about mid-August. And September, you get your 25, which will be mid-November. So that's roughly, now let me go, now I've gone, I'll leave the spreadsheet open at the moment. Just bear with me. Oops, where's my questions? Oh, I know why. Are there any questions?
Okay, we've got one for you, Adrian.
Okay, I've got one already from last week. Okay. Nita, you can read it out to give my voice a break.
Okay, so just to let you know, guys, our team is also on the call. They are here to support you all through this. Guys, want to give a shout out?
They can't. No, they can't shout out. No, they can't.
Okay, so yeah, it's Catherine, Charlotte, and Mandy are all there to assist you. Okay, so the question I've got, so if you don't employ anyone and you're in a partnership business, is this relevant?
And the answer to that is straightforwardly no. You need to be employing people for this to be relevant. Another question that's come through is, if you've been drawing income as dividends and still paying POIG personally, are we eligible? And the answer to that is no, it's got to be payroll. So basically you've got to be drawing a gross wage from your business, either paid to you and or staff. So it's not, obviously if you're drawing an arm's length, if you're drawing a salary from your business and no other employees, that would still be counted. Or if you're drawing a salary together with other employees, all of it's put together. Okay.
Another question. Will the refund tax-free payments be remitted as cash payment into the company bank account?
How I understand it is whatever bank accounts linked to the ATO system, if these stimulus payments put your account into credit, it will go into your nominated account that's linked to the ATO as a refund for the tax-free amount, yes.
Do you get the minimum of 100,000?
10,000.
Sorry, 10,000. If your tax holding is less than 10,000 per stage one.
Yeah, what they've said, let me just go back to this. If with stage one, I'll read this again. Employees that pay wages will receive a minimum of 10 grand, even if they're not required to withhold any tax, or obviously less than 10 grand would be the same. It's 0 up to 10 grand. You'd still get your equivalent of 10 grand minimum. Okay. So, but that 10 grand is for stage one. And you would, if you got 10 grand for stage one using the same logic, you would also get 10 grand for stage two. Okay. Next.
So if I have more than one business and I pay 2 different BASs, am I entitled to 2 lots of payments?
The short answer to that is absolutely. Because if you're running 2 separate businesses, then there's 2 separate obligations, 2 separate lots of wages, etc., etc. My understanding is, unless which I've heard nothing to the contrary, that each business that employs people has these benefits and rights per business. Okay.
So, yes. Okay. A new business owner, I will be paying myself genuinely for the first time in March for the 4-month period I've owned the business. I've not paid myself, to this point. Do you think this is at risk of getting flagged? And if it gets flagged, can it be justified?
Okay. That's a tricky one. There's always tricky grey areas. I know what they're trying to do is to stop contrived arrangements, right? Now, I gave examples of contrived arrangements before where, you yourself and you've been running your business and you decide to draw a wage, or you're a contractor and you put someone on as an employee, that sort of stuff. If you've only owned the business for a few months, I reckon there'd be look, obviously hypothetically without having a detailed discussion personally with you, so don't hold this to me, it's a general comment, as is everything in this, by the way. It's just general commentary. Any specific advice has to be one-on-one. I would think there's a reasonable argument that you don't draw a salary in the first few months because you're getting used to it all, you're running your business, you don't want to put undue cash flow pressure on you as a business, etc., etc., etc. I would think there's a reasonable possibility to argue that one. Yes, I do.
Okay, I have a company. I take the director's wage at the end of the year. My wife's an employee in it for many years. Am I eligible for this stimulus?
Okay, so I'm assuming from this that the wage is done by the accountant at the end of the year. And the tax is obviously, if there's any tax payable, I imagine it's paid in the last quarter. Yes, I think, because well, hypothetically again, I reckon that there's a reasonable argument if you've been drawing a wage annually for year in, year out for a few years, as long as the wage doesn't drastically vary. I would probably seriously consider doing some in March and some in June, rather than having it all in June, because of the way the stimulus works. And your justification could be, I took it all in June last year, but to spread out cash flow, I think there's a reasonable argument that you take some in March and some in June. Ideally, I think it would be better to try and take it every quarter, but as long as your wage isn't drastically different to last year, there's a reasonable argument there again. Next question.
I'll let you read that one.
For quarterly BAS PAYG, if the total amount is 30 grand less the PAYG, in other words, 18 grand. Oh, hang on, this is confusing. So can you read? And I'm not sure, I'm not going to mention names, but you know who you are. 5:57 p.m. 30 grand less PAYG 13 equals 18.0 to, well, 17.0 to the government, mate. What do you mean? Is the PAYG 13, is that group tax that you're paying for your employees? Can you clarify that question for me, please, and come back to me? And
I'll go the next one.
So hang on, you've written yes. So if that 13 grand is the PAYG, that's for it's quarter, isn't it? So that means you would be eligible for a maximum of 26 grand. Now, I don't know if that's what you're talking about, and it's 13 grand each quarter. It's not yet known if you owe GST, because remember the ATO, look, I'll say this quite bluntly, the ATO have been very silent on lots of things, right? Including putting a lot of pressure on us tax agents to still get everything done and help you guys through this difficult time. So we're yet to know exactly what the ATO are going to do with everything, right? But I think I know what your question is. I think your question is, if you're eligible for 13 grand and you've still got to pay 17 grand GST, do you get the refund? I would say off the cuff that I don't think so, because your GST will outweigh the group tax stimulus amount, right? So it just means you end up only 17 grand is what you end up having to pay instead of the 30. So you do kind of get it in the wash. It comes out of your, normally you would have allowed for the full 30, but you're only having to pay the 17, which is the difference between your group tax and, say, the GST. So that's a good question. I think that's how it's going to work. We'll find out obviously in due course.
I'm a sole trader working on ABN. I pay wife about 16K a year to manage the books for me. Do these measures help me in any way?
Only if your wage is, only if your wife is paid a wage. If she's just paid as a contractor, that's not going to help you. So it depends how your wife is paid, because there's two ways of paying your wife. One would be as an employee, and the other one would be if she's got an ABN. It might be sometimes easier administratively just to pay her with an ABN effectively as a contractor. So
there's no tax.
There won't be tax on the 16 grand, right? Because under 20 grand, well, under 18.2, there's no tax anyway, but it still would potentially mean if she's drawing a salary as such and not a contracting payment, that you would still potentially be eligible for the 10 grand, especially if you've done it year in, year out. So that would mean you get, because there's no tax on 16 grand, you'd still be eligible for the 10 grand in stage 1 and 10 grand in stage 2.
Okay, what if we don't draw a wage but pay into a service company that pays the staff?
The service company is then paying the wages, so it would be eligible for the, because they're effectively treated like separate businesses. So what that would mean, without knowing any more details, obviously, because this is very generic, that then the service company effectively the one that remits the PAYG tax. Therefore, it would be eligible for the stage 1, stage 2 benefits. Next question.
This is a tricky one. This is probably more directed to employees, sure.
How do you calculate what is more viable to business, stand down employees or keep paying them and get the benefits? That's something that's beyond the stage, beyond the scope. Sorry about that. It's a very, very good question, but that is a very complicated answer. I'm sorry, that's beyond the scope of this. And put it this way, if you're a client of ours, what I would do is we would have this chat, but probably have it in conjunction with our employment law specialists so that we could liaise with them from an employment law standpoint, because that's not our expertise, with the tax side, and try and work out a cost benefit, do some what if calcs about how that works, because it's a very complicated answer that has a lot of ramifications. So the question was standing down employees and paying them, getting the stage 1, stage 2 benefits. That's something that's too hard to answer here. I'm sorry about that, but it's certainly potentially viable, but not a straightforward answer. Now, would the family trust division of profit at the end of the year consider a payment you get your tax back on? Not in this. A family trust distribution that happens at the end of the year is not deemed a wage / that you have PAYG tax on. That is a different thing, which I'm going to cover in a minute, but it's not part of the stage 1, stage 2 stimulus benefits, okay?
Okay. Would an entity be eligible for tax repayments if the business it works for is already claiming this? I.e., my company is contracted under SFA to work for a dental practice. The dental practice claims the tax-free payment. Can my company also?
No.
Okay.
No, based on what example you've told me, I don't think that would be the case. There's no way there's going to be double dipping allowed. It's going to be whoever pays the true wage and pays the PAYG tax is the entity. This is how I understand it. Is the entity that's going to be eligible for the stage 1, stage 2 benefits.
Okay. Is the stimulus based on PAYG amount entered into W5? Obviously,
I don't have the BAS in front of me, but basically, if you go back to, I'll come back to it. I can probably go back to my PowerPoint presentation now. Can you just hold on 2 seconds on that one?
We'll keep going through them. I'll come back to that.
I'll come back to that one. I pay myself $400 a month wage and get money separate as owner drawings. Can I increase my wage from March to 400 to 5,000 and reduce the drawings? Okay, I think it depends on what the track record over the last 12 months is. Remember I said there's the integrity measure. If you drastically increase, or it's going to trigger an integrity measure analysis. And if you fail that, so look, without speaking to you one-on-one, I would say generally speaking, if you take a big jump, which I think you're talking about going from 400 to 5 grand, I would argue that is potentially a problem, and maybe suffer under the integrity measures.
Okay.
Next question.
Using the example, what do you have to pay the ATO in order to get the refund?
Okay, let me go back to that.
It's just a little bit under the 8,000 mark.
Hang on. Where's my Excel gone? Okay, can you guys see the Excel?
See
yeah. Okay, let me go back to the monthly figure again. So roughly how you can work it out is, if you go plus 50,000 divided by 6, that means if your group tax commitments are more than $8,333.33 a month consistently, anything above that in group tax, you're not going to get any additional stimulus under stage 1 and stage 2. So, because 8,333.33 times 6 is 50 grand. Remember, you can't get more than 50 grand. So if you divide that by 6, that means your monthly group tax or PAYG tax, once it exceeds 8,333.33, you get not 1 cent more.
You're also looking at that BAS item?
Which, sorry?
You're going to look at
oh, yeah, sorry, yeah, the BAS item. I don't have the, I hope that makes sense. Okay. Now, the BAS item, I don't know it I don't have a BAS in front of me, but basically gross tax goes in under your wage. When you're paying wages monthly, sorry, when you're remitting your PAYG tax monthly, you're obviously submitting a document to the ATO every month. Basically, your gross tax goes in one column and your tax deduction goes in the next column. And I think W5 might be right. I just don't have it right in front of me for the purposes of this. But I'm pretty sure from what you've said, the W5 amount, which is the tax amount, is the thing that matters. So I was just going to go back to my presentation.
I think that's all the questions.
Is there any more questions on PAYG tax before I move on to the next element of my presentation?
Hey guys, it's Grace here. Sorry, just joining in.
Our team.
You've got quite a few questions popped up in the chat box.
Oh, okay.
Oh, hang on. I've been going in the questions box. Hang on.
Thanks, Grace.
That's okay.
So let me minimize that. Oh, it's up here. Okay, there. Why isn't it showing me? Where is it?
Have you got them, or do you need me to read them out to you?
Here.
You got them?
Okay.
Thanks. Well, you can read them, Grace. That's fine. And instead of me, go for it.
Oh, it's up to you guys.
Oh, hang on. No, I'm going to go down a bit. Sorry. Okay.
All right, well, we've had somebody ask, is this applicable to sole traders or just business owners who have a company?
As a sole trader, the ATO normally look at that you can't pay yourself a wage as a sole trader. You can pay other people who work for you, but generally speaking, you can't be an employee of yourself. So I don't know if you mean sole trader or if you mean a trust company or whatever, but if you're literally an individual sole trader, you definitely can't pay yourself a wage. But if you're running through a trust or a company, and look, it's beyond the scope of this presentation. If you pass all the personal service income tests and, you're able to claim, run your business through a trust or a company, for instance, and then potentially you can draw a salary, especially if you've got other people working for you as well. But generally speaking, if you're just a sole trader, you won't be able to do that. Next.
All right, what about making staff redundant where you have to pay out AL, making your March PAYG higher?
Well, any tax you pay on the AL will be part of this stimulus. It'll be part of the 50 grand figure that you've got to pay for part 1, stage 1, because any tax, so when you're paying staff, you're paying them for your normal wages, but it can also be sick leave, annual leave, all that sort of stuff. Any tax you pay on those gross payments are part of this stimulus package. So yes, and therefore, if you're paying out annual leave in March, then yes, that's a legitimate reason why you're, in my opinion, without knowing all the full details, why you can your tax will go up.
Alrighty, can you raise your pay by $150 a week, or will that stand out?
It depends on what you're currently paying a week and how much of an increase that is. So I can't answer that unless you want to give me some more detail. It totally depends on what that is, a percentage increase relative to what you've been drawing already.
This refund, as per the example, a direct refund into our account or deducted
I think
from
I've
the
covered that,
quarterly
Grace, because what happened was, in that example I gave before, the person who put up the example of 13 grand group tax and 17 grand GST, normally they would have paid 30. So instead of paying 30, they only have to pay the 17 because they get the 13 off it effectively. So that's my understanding is they net off if you're not a full refund after the BAS is lodged. Now, if you're paying monthly, you will be a refund on 2 out of the 3 months because there's nothing else you pay each month when you're paying monthly.
So I've got an apprentice. Are they also covered?
If you're paying them a legitimate gross wage, absolutely. And it depends if they're paying tax on them or not. But if you're not paying tax on them, and remember, you're eligible to get a minimum of 10 grand potentially. So yes, gross wages paid to apprentices would be covered under the rules depending on where the tax sits in that.
Can you convert from drawings to payroll now?
Okay. I covered this a little bit earlier, but I'll quickly go over it. Based on the integrity rule, if you have not been drawing a wage, then if you try and do a big payroll thing now or start doing it now, it's potentially at risk under the integrity rule. So I would argue it's very risky to start paying wages now when you've never drawn them before.
Does it matter if you employ staff as casual or permanent? Also, just to confirm, the stimulus relates to the tax withheld amount, not the total staff wages.
Yes. So yes to all that. Casual and permanent make no difference because they're gross wages to employees, and it is definitely the tax amount, not the gross payment or the net payment to staff. It's what tax you withhold from their wages.
If I, as an owner, work as the dentist and get distributions at the end of the year to a trust, can I now put myself on payroll to apply the stimulus?
No, I think I've already covered this. I think you're asking for trouble to do that because they're going to look at your track record and history over the last 6 to 12 months. And if you suddenly do that now, I reckon you're at risk under the integrity rule. And there's a few questions similar to that. They're basically variables of the same question. If you've only lived off drawings or distributions before and haven't drawn a wage, I think you're going to be at risk under the integrity rule. Even if you go ahead and do it, I will be very surprised if you don't get questions. And if you get questions and can't justify legitimately how it stacks up and you haven't done it to manipulate, you'll be in trouble. So I think anything that you haven't done before is really asking for trouble.
That's a good question.
Okay, let me just quickly flick through these. No, I'm not going to. Which one?
This one. I pay myself fortnightly. My next fortnightly pay covers the last week of March and the first week of April. How does this get reconciled?
Yeah, good question.
March?
Normally with wages, how it works is it's done on payment date. So for instance, if you're paying someone for the end of March and the start of April, say it's paid on the 7th of April, it's done on the 7th of April is what period it falls into. It's not the cutoff. You can't straddle it and go, normally it's just, it comes out in the wash. So if you look at it that way, it comes out in the wash over 6 months, which is why they do it that way. But in true pedanticness terms, it's the day it's paid is the period it falls into when it comes to these types of benefits. So it will fall into April.
That's a good one.
Next question. Drawings, I've said that.
No, this one. Quarterly lodger. Is the June payment based on March BAS? What if April to June we get less employees?
Quarterly lodger. If you've legitimately, okay, let's say you legitimately got less employees from the June quarter to the March quarter. Effectively, what will happen is they'll look at your June quarter and give you the PAYG tax benefit based on that, and they'll add it to, and you'll obviously, the total of the two benefits will be what you've done for the March quarter together with what you've done for the June quarter. Now, if you happen to employ less people legitimately, that just means your PAYG tax stimulus will be less. If you happen to legitimately employ more in that quarter and there's nothing contrived, then the flip side would occur. You would actually get a higher benefit. If your business was growing, which obviously a lot of people's aren't, but if they were for some reason and you legitimately employed more in the second quarter, then the flip side occurs, you get an additional stimulus amount as a higher amount in the last quarter.
That's an interesting one.
Okay. Next question is they've got tax payments on hold until the 15th of September with the ATO. Stage 1, stage 2, how would it be applied to the tax bill? I don't know the answer to that, because what we're talking about, from what I understand, is part of the activity statement rules, which flows to the BAS and activity statement. If you normally got an activity statement refund, even if you had because with the ATO, they separate into two, like they cross over a little bit, but in the ATO portal, they've got a tax area and they've got a BAS area, right? Or an activity statement area, and they have separate running balances and separate amounts. Now, if you've ever got a refund on your BAS, but you still owe a tax bill and you've got that refund, I would argue that you'll probably get it. But if you have never got that refund, and if you've got a BAS refund and they've chucked it across onto the tax bill, I would imagine that would potentially happen. But what I would do in that instance, I would strongly suggest, is we would have a conversation with the ATO. If we were working with you, we would have a conversation with the ATO and just drill in a bit more, because remember, this is a learning curve for all of us here, because this is new for us, it's new for the ATO, it's new for you guys, right? So we're going to need some time and see how the practical stuff beds down over time. But based on what I understand, there is a risk that they might apply it to the OS tax bill. But that, who knows, under these rules, they might do it differently because they're trying to keep businesses going. So they might have directions from the ATO to go, or the government to go, no, no, no. If they get a refund, give them a refund and let them keep paying the tax bill off. So I don't know the answer definitively. I would argue we'd have a chat and see where it goes from there.
Now, I mean, general question, if you lay off a staff member and you employ your wife to do that job, the PAYG held on her salary?
I would argue there's potentially an argument if you legitimately lay someone off and then you employ someone else to do the same role, equivalent role, similar wages, and the employment agreements has the job description similar and pays them. And
it's an employment question as well.
Yeah, it's an employment question as well.
And that gets a little bit grey.
But there is some argument there that might pass the integrity.
PAYG, yes.
They might.
Employment issues, maybe not.
So, potentially.
Yeah.
So look, there is potential that might stack up. It's definitely not a no. I think we could work on that, and it'd be a work in progress between, say, your accountant / us and employment lawyers. Next question. If we don't employ anyone on payroll and have PAYG payment, I'm going to come to that in a minute about if you don't employ anyone, what other options there might be. I'm just trying to get through this element of it, and then I'm about finished taking questions, I think, on that. We'll come back to, we're about finished. So, okay, last question, last couple of questions. If you lay someone off and employ someone new in a different but essential role, I would still think there's potentially a reasonable argument. What they're really trying to stop is contrived arrangements where you go, myself and my wife haven't been drawing a wage for the year, but now because of this, I'm going to now pay ourselves a wage. Or Joe Bloggs is a contractor for our business, but because it suits us and we can get PAYG now, I'm going to put him on as an employee. That stuff's all no-nos. Or I'm going to employ my son, my daughter, my father, they're all contrived arrangements. If you legitimately lay someone off and you legitimately potentially employ someone and it passes the sniff and smell test and commerciality seems to stack up in terms of you're paying them a similar dollar value for the output and you've got all the agreements and contracts and everything else, I think there's a reasonable argument that would stack up. Obviously, it's something we could have a one-on-one discussion with. I think that's all I'll take on this for now. What I'm going to do now is I'm just going to jump out of the spreadsheet and go back to my presentation. Okay, so hang on 2 seconds.
Yep.
Okay, so now let's go back to the presentation. Sorry about that. Now, part 2. And just as important, and I covered this the other day, but a person just brought up, if I don't pay wages, what do I have available? This is this, okay? This is part 2 or option 2 of cash flow benefits. Now, what the tax office has done is they've said, all right, you get your stage 1, stage 2, but on top of that, they're going to give you some ability to implement some administrative measures to help Australians who are experiencing difficulties. So I'm going to take them through one at a time. Deferring by up to 6 months the payment dates of amounts due through the business activity statement, including PAYG instalments, income tax assessments, and fringe benefits tax assessments. Allow businesses on a quarterly reporting cycle to opt into monthly GST in order to get the GST refunds quicker. Allowing businesses to vary your PAYG income instalments to 0 for the March 2020 quarter. Businesses that vary their PAYG instalment to 0 can also get a refund for instalments made for September and December. I'm going to cover these in a bit more detail in a second. I'm just going through the guts of it, okay? Remitting any interest and penalties incurred on or after 23rd of January 20 that have been applied to any tax liabilities outstanding. And they're going to work with affected businesses to help them pay their existing and ongoing tax liabilities by allowing them to enter into low interest payment plans. I do want to note the caveat down the bottom. If you're employing staff and paying wages, you must continue to pay super guarantee obligations. You're not going to get any leeway on those. They're not negotiable, and directors can be personally liable for unpaid super instalments for employees. So understand this has nothing to do with superannuation, okay? It's purely these. Now,
can I just interject there and say, Catherine will be talking next Wednesday about what benefits you can get from your super and cash out of that.
Yeah, that's covered on this Wednesday's webinar, which I'm going to cover in a little bit later. But so, for example, what that means is, I'll take them one at a time. There's potential here to any business activity statements owing. Now, don't forget, we haven't done March yet, so this can include March. Any business activity statements amounts owing, you can potentially defer by up to 6 months. And also that includes income tax assessments. So any tax you owe can potentially be deferred for up to 6 months. Now, the next thing I really want to hone in on, point 3, if you're a company, if you're actually a trading company, then when you lodge your quarterly BAS, you will also be paying, assuming you've made profits in the past, you will be paying a PAYG income tax instalment. Now that's different to PAYG withholding for employees. This is effectively paying company income tax in advance each quarter. That's what that's talking about. If you are a beneficiary of a trust or a partnership or a unit trust or a discretionary trust or something else, and you've been getting trust distributions that you declare in your personal tax return each year, then you will no doubt be on the PAYG income tax installment system personally as well. So once again, each quarter, you will be personally paying each quarter a quarterly income tax installment as well. So if you happen to have a company and a trust and you're getting distributions, you might be paying quarterly income tax installments for your company as well as for you personally as a beneficiary. Now, what that means is they're potentially giving you the option of varying your PAYG income tax installment for the March quarter to 0, okay? And if you do that, they're going to give you the option of also claiming back your September and December installments. Now, that means 3 installments you're potentially going to get back in one hit, which is amazing for cash flow, okay? But let me explain what you have to be aware of. If you do that and you don't pay a June installment, when you lodge your current year tax return, which is 2020, that means there will be no tax paid in advance, which means if you've got a reasonable tax payable bill for that year, you will have to pay 100% of that around about May next year. Okay, so let's say in just over 12 months. What it does do is it buys you cash flow breathing space and gives your business a cash injection, right? Which is gold, because it's going to help you try and get through this difficult period and come out the other side, right? But don't forget, and that's important, because that might be the difference between surviving and not surviving, or coming out breathing and not, okay? But don't forget that there will be a sting in the tail, and that means you've got to pay 100% of the tax liability around about May next year, okay? So you've got about sort of 14 months breathing space, but that's a long time away. And for a lot of businesses, that might be almost not negotiable, that they have to go down this path to help free up cash flow, right?
Can I ask a question, Adrian? Have the ATO given any guidelines on what you need to do to actually be eligible for that?
As far as I know, if at this point in time, we'll know more as we practically deal with this stuff, because it's all theory at the moment, is I think you're eligible if you pay a PAYG income tax instalment.
Okay, it doesn't mean that I have to have lost 50% of
No.
well,
I think as far as I know, if you're being remotely affected so I actually don't think there's any such requirement that you have to drop so much in income for this to work.
they haven't
There is other measures that effect is affected by, but as far as I know, they're giving this to small business owners as a means of getting them through. They're working on the assumption that all small business is going to be affected by this, and you've got that option to help you get through this period. Okay, so as far as I know, there's no income percentage reduction or anything like that is required. Now, so that alone, point 3, is going to be gold for most people. And together with point 1, where even if you have a March activity statement where you might get a tax-free, stage 1 payment against it, okay? You can still potentially take a 6-month hiatus on paying that. And same goes for any income tax assessments that might be due. There's potentially a 6-month hiatus before you have to pay it. Once again, you're still going to pay it, but it means you don't have to find it for 6 months. Now, further to that, we've actually contacted the ATO just to try and get a bit more clarity, okay, on some of these things. As always with the ATO, they're as airy-fairy as anything, but what they told us was, where we are your accountant, we will do the heavy lifting in this space for you, okay? So we'll help, we will be the ones at the coalface, getting your, so point 1 where you defer 6 months, we'll be the one trying to organise that for you, and same with varying the PAYG instalments and all that sort of stuff. We'll be the ones doing that for you.
And Adrian, that'll come up. We've had a consultation and we've established how much sort of cash flow we're needing to get through this period.
Yep.
Yeah.
Because the whole point of these webinars today and Wednesday is to get an idea of the general measures. And then, as I mentioned earlier, the one-on-one discussions that flow from there to specifically apply these measures to your personal situation is where we actually drill in and go, what suits you, what doesn't suit you, righto, we're going to pull the trigger for you and let's get it going, okay? So in relation to that, any debts that get deferred are done, according to the tax office, are done on a case-by-case basis at the moment. So that's for things now, right? So, at the end of March. At the moment, they're deferring things until the 14th of September. We strongly believe that date will push out over time, because I think the tax office are under a directive from the government. Do not make it onerous on businesses. Give them what they're eligible for here. So, for instance, if in April, if we're applying for a deferral of 6 months, I think that'll push out to October, and so on and so on. It's not 100%, but I'm using common sense here based on what we've been told. Now, the other thing that mentioned, point 4 here about remitting any interest and penalties incurred from the 23rd of January. And the bottom point about paying liabilities and entering into low interest payments. They basically said to us over the phone, so please don't hold this to us, but this is what they told us over the phone. All payment plans entered into between the 21st of January 20 and the 22nd of January 21 will have no interest on them. So they're basically saying it's not low interest, it's no interest between 23rd of January 20 and 22nd of the 1st 21. Beyond that, we don't know. But hey, if that's the way it is, that's a bonus because it potentially no interest. Now, in relation to your question, partly about what you mentioned, Anita, about part 3, about the PAYG income tax instalment variations, any entity can do it. So if you're an individual, and as I said, you're a beneficiary, you can do it. If you're a company, if trusts happen to have them, they can do them as well. There's no restrictions on who can vary the income tax instalment. And the other thing that they've told us in relation to point 3 about allowing the businesses to vary PAYG income tax instalments, supposedly on the next activity statement, and as you know, the next activity statement's March, which we're not even there yet, 31st of March is tomorrow. Apparently on the 31st of March activity statements, there's going to be amount claimed, a section on there where you can claim back PAYG instalments automatically on that form to September and December. So what it sounds like, on the March PAYG income tax instalment, you're going to be able to vary it to 0 as per this, but on the same instalment, you're automatically going to put in, you'll be able to put in the September and December amounts and get a refund back all on the one PAYG income tax instalment, which to me makes a lot of sense based on what they're, and look, to be honest, highly practical for the government. So I'm quite surprised by that. Also in relation to this, I'm not going to go into this, but basically the Chris Jordan, the Commissioner of Taxation's basically said, we're here to help you guys get through this period and we will do anything we can to tailor a plan to suit your own situations. And we'll support deferrals and everything where we can. The other important bit I want to mention, unlike bushfire relief, which is this last point here, which automatically applied based on geographic areas, any assistance cash flow wise under the COVID-19 measures will not be automatically implemented. You must one-on-one contact the ATO and get things done in place client by client. And as I said to you, if you're working with us and you're one of our clients, we will be doing most of the heavy lifting for you after we have our consultation with you about what you desire and what suits your situation. We will be doing the heavy lifting. There's also a ATO emergency support info line here, 1-800-806-218. Haven't read it, haven't rung them, don't know what it is. We ring the tax agent hotline, which we find is far more practical from a business point of view.
Can I just ask a question there, Adrian? They're saying, you know, you've got to apply. That's all for these administrative sections. That's not for the PAG withholding. That
application that they're talking about here, in point 3 here, that's got nothing to do with stage 1, stage 2.
Yeah, okay, thanks.
It's purely to do with these admin measures here that I've gone through, which is primarily the 6-month deferral of income tax assessments.
Which are really creating individual strategic plans for cash flow for businesses.
Yeah. Mm-hmm. So I'm now at the end of the admin measures. So with someone who asked me before about what have we got for people who don't draw wages, right? This is what you get. You've got the ability to vary. You've got the ability to defer your BAS-in payments, your tax your tax assessments, and vary PAYG income tax instalments, which I think is huge. Now, let me go to some questions before I move on.
Have you got any questions in the chat?
There is one that is, nope. There's a couple in the Q&A that have popped up.
Okay.
Okay.
Do you want to hit us?
Yep.
Let's have a look. So where are we up to? Single touch payroll has not been working for my company since the initiative started. The ATO are aware of it. If I was to be added, will that, so that the tax is similar to past returns, will that raise an integrity issue?
No, not if it's an ATO problem. They're aware of it.
Sorry, let me read that again. That's a lengthy one. Hang on.
You might want to deal with that one of them.
It's something I might talk to you about separately because you are a client of ours. But in a nutshell, if it's due to situation beyond your control that the tax hasn't been able to be paid because single touch payroll is not working, I would argue there's a reasonable argument here as to why it hasn't been shown, but I'd certainly be trying to get on top of it
By
now.
tomorrow.
But now for this quarter and for the next quarter, I'd be jumping all over that and getting the bookkeeper to really get into that, because I think it's, if you're going to try and argue that, I think it'd be reasonable to try and say you fixed it in the March and June quarters, if you know what I mean, instead of leaving it till the June quarter. So potentially, I don't think that's an issue potentially, but I'd be getting all over it to try and fix it like today and tomorrow. Now, next question regarding PAYG installments to zero. Can dentists working as a sole trader do this? Absolutely. Because PAYG income tax installments, it doesn't matter who it is. You could be an individual being a sole trader. You could be a beneficiary of a trust and you get a trust distribution or a partnership distribution that goes to you personally. Anything that triggers PAYG income tax installments, whether that's a company, trust, person, sole trader, beneficiary as an individual, all of those things you can vary. Absolutely, no questions asked. And next question, so to vary your PO, do you still have to request assistance info?
So vary your PAYG to zero. Do you still have to request assistance from the information?
No,
ATO hotline?
no. The assistance, that's a good question. The assistance you're talking about is really only if you're deferring. So for instance, if you're doing option one, where you're deferring 6 months, the BAS income tax assessments, absolutely you need to do that on the ATO hotline. No questions asked. And I think a tax agent is better placed to do that for you, because they'll be slammed. If you look at what's happening with MyGov websites and Centrelink queues and all that sort of stuff, crazy times. I think the tax agent, your tax agent would be best served to help you with that most efficiently. If you're just varying your PAYG installments, you don't need to negotiate anything with the ATO. You can just do that as part of your quarterly PAYG income tax installment processing system. So absolutely, that's automatic once you process it on the system. So
Rex, can you see any other questions out there?
Is there any chats?
No, I think that looks like you've covered most of them.
Beautiful. So we'll
That's
move
it?
on to the
All
next.
right, so I'll move on. Okay, I wanted to go through this again really quickly because A, there's more people on this that weren't on the other day, and it's still important to know. Enhancing the instant asset write-off. So as most of you guys would know or should know, if you're running a business, basically if you buy an asset that's not a, well, forget about car. If you just buy an asset that you can, is for the business and it's less than 30 grand plus GST, this year you've been able to write it off fully. As of 12th of March, they've increased that threshold from 30 grand to 150 grand. And they've increased the access to all businesses with turnovers of less than 500 million. So you're talking some seriously big businesses up from 50 million. So, and that's something I would definitely talk to you one-on-one about if you're going to do this, to make sure if it's still appropriate, et cetera, et cetera. I'm going to come to tax planning in a minute, but this element would be definitely part of tax planning conversation that I would have with business owners. And for a small business entity where the turnover is less than 10 mil, I won't go into the details, but there's a simplified depreciation claiming method called general pool, where you don't have to depreciate it asset by asset. It just goes into a pool and you depreciate the whole pool balance at a fixed rate. And it's 15% in the first year you buy it, 30% thereafter. But the beauty of it is, if your turnover is less than 10 mil and your balance of your pool is less than 150, excluding depreciation at 30 June 20, we're going to be able to write off the whole balance of that pool, which will mean potentially a big tax deduction. Now, there's something else they talked about in the depreciation stakes, is a business incentive to buy assets. Now, they're talking about introducing a 15-month investment incentive to support businesses by giving them a higher depreciation claim. What they're allowing is a deduction of 50% of the cost of the asset that you buy on installation, and with existing depreciation rules to apply to the balance, which will mean past 30 June, there's still going to be a reasonable incentive to buy assets and get a pretty good deduction for it, where your business turnover is less than 500 mil. And the exception to that is capital works and construction bits and pieces. So hardcore costs like plumbing, electrical, roofs, floors, as in not carpet, but, you know, underfloor plumbing and all that sort of stuff is not included in those rules. And that will be applied to assets used and installed by 30 June 21, which is an extra year on. Now, before I go into that, is there any questions on the deductions and business incentive with that?
You have had a question pop up in the Q&A. If a business coach were to develop this service into a product that a client purchases, could that program be considered an asset to a business?
Potentially yes and potentially no. Because I know who this is and they're a client of ours, I will have that chat with you one-on-one because that's not a straightforward answer. So please defer that discussion for when we talk to you one-on-one about your own situation, because it's beyond the scope of this webinar, because it's not, if it was straightforward, I'd give you a straightforward answer, but it's not a straightforward answer. And we're going to need to work together to work through the nuances of everything here and see if how it applies to you and dig a bit deeper to give you an accurate answer. So I'm sorry about that. But it's the best I can do in this situation. Now, so I'll go on then, unless there's no other questions, I'll go on. Now, what I wanted to mention too is home office expenses, because so many people now are working from home. I thought it not a good time to mention home office expenses. And you know, as the slide says, we're in an ever-changing world at the moment. So there's a lot of people working from home. So it's important, if you're going to work from home, you at least maximize what you can do from home and what you can claim from home. And one element of that being a 4-week diary. Now, I'm not going to go into details today. I just wanted to flag it. We've got a blog on our website going into home office expenses. And I've also done a webinar on our website, which goes into a lot more detail. There's the blog link. And there's the YouTube link, which is the webinar link on our website. I encourage you all in your own time to review that and go through any...
Maximise your deductions, make that tax man work hard.
Well, as anyone knows who works with us, we're big on what I call squeezing the lemon. So that means if you do lots of things right, it adds up to big things. So this is another one of those lemons, and that is... squeeze everything as much as you can and maximize everything. Now, on our website, if you go under superioraccountinggroup.com, then resources, then webinars, that's where you'll see the home office expense webinar. But we've got other ones. There's a fringe benefits, travel diaries, car logbooks, tax planning for businesses that we did last year. And that webinar there is this webinar I did with Jesse last week on the Australian government. Whoops, hang on. The Australian government's economic response. That's all on our website. So I encourage you to go there and watch some of that stuff. There's lots of knowledge in there that'll help you guys maximize as much as you can.
There's templates and lots of other different resources that you can avail yourself from.
Yeah. Now, I thought it was an appropriate moment that I let everybody know that we are now officially working from home as of this week. Due to the new rules from the government and how much it's all changed, we decided as a business that it was in the best interest of the health and safety of all our staff plus the community as a whole that we work from home. But we wanted to assure everyone, for far as you guys are concerned, it's business as usual, because we're getting all our emails, our phones getting answered, and you won't even know that we're not there, and we're doing everything like we normally do. But the only slight difference is when we're ringing you, we're ringing you from our personal phones. So, you know, there may well be private numbers come up. What we'll do is we'll text you if we're going to call you to expect a call, and then we'll call you from our mobiles. And everything otherwise is business as usual, except we've now no longer in smart casual. We're sitting in our PJs and onesies. But that's a look that I probably won't want you guys to think about. So we'll just keep moving on. And the only other exception is, because we're not at the office now, we won't be getting mail. So I encourage you all to anything you send us, please make sure it's sent via email / electronically.
Most people do that for us anyway.
Correct. But so try and avoid mail while this madness is going on. Okay. And any questions or concerns, please feel free to contact us. The other thing I wanted to remind you of, tomorrow being the 31st of March is the end of the fringe benefits tax year. Now, for all of you guys with businesses and business cars, please record your odometer readings and email them into us so we can save them for you and not ask for them when we're doing your tax work and you've got to remember what your odometer reading was on the 31st of March. So please do that. Remember to do that tomorrow night and email them all in for any business cars you have.
We sort of went through this before.
I covered this before, but I'll briefly go through it. The webinar that we've got on Wednesday night at the same time, I'm holding with myself, Melissa Mann. Now, Melissa Mann is our personal broker, and she's also a broker to a lot of our clients. She's going to be talking about, effectively, you guys probably have heard a bit about the 250K unsecured loans, which is part of the stimulus, and a little bit about how that works. Plus, she's going to touch on how you can potentially speak to your bank and defer 3 to 6 months worth of loan interest repayments. But that's something you have to do yourselves with the bank. That's something we can't do. And then what traditional finance options are still available to help you and your business access other money.
In these crazy times.
Yeah. And Catherine, who works with us, she's our super guru. She's going to be touching base on super and how you can get potentially some of your money out of super and how you go about doing that. So keep an eye on your emails in the next day or two as the link to this webinar will be coming out. And if time permits on Wednesday,
I get to touch a sensitive subject. I'm going to be talking a little bit about budgets because we all need to know what that dollar figure is that your business needs and you need to survive this period. So it is going to be a matter of doing budgets and knowing those numbers. And flowing on from there, what our team will be doing, and Charlotte's going to be working on this once we've sort of got all of these processes into place, and that's putting into it a cash flow. So the two elements are you've got the cash, which Adrian has sort of spoken about today, and how the options and what money we can get from the government. And then on Wednesday, you know, what money we can get out of super, what money we can get from the banks. So we'll have our income side of it. And then now we're going to look at the expenses and see what expenses we can put on hold, what we can cut down. Yeah, all of those things that we can try and do to make us get through this period together.
and as it says down the bottom, what dollar value you need for you and your business to try and survive.
Yeah. And then after that, then as I said, that's the cash flow area. So Charlotte will be working with a lot of you on that. So
as we reiterated at the start of this, I want to reiterate it again. What today's about, what last Wednesday was about, what today's about, and what this current Wednesday is about on the 1st of April. At the end of that session, we're hoping that you guys have the general knowledge to know what cash is out there for you guys to from the stimulus, from the tax office, from the banks, etc., so that you can get as much active cash flow to get you through this difficult time. Because I want to reiterate this again. I said it last Wednesday and I want to reiterate this again. This time now is when you need your advisors. So you need your accountant, you need your lawyer, you need your broker, you need your business coach. Everybody who is your trusted advisor and part of your trusted team who knows you inside and out and knows your business inside and out, you need them more than ever through this difficult time. So utilize the cash flow stimulus from the government and the ATO and the banks to get as much ready cash as you can, and work with us to activate those strategies and to work with your budget and your cash flow. But your trusted advisor is crucial to getting you through this period. So I would rather you try and save some of your cash flow to work with your trusted advisor to help you come out the other side.
Because your business is probably going to look different by the time we get through this too.
Absolutely.
I just want to say there that, like, guys, for our team, we have been working tirelessly in the background here. I mean, I know contact and all the rest of it for you in respect to Adrian, it hasn't been normal, okay? But we believe that this is the most effective way to share this information with all of you. It's also the most cost-effective way because this is all on us. I want to say that, for poor old Adrian, I'll get a bit emotional now, and Charlotte, they've been going through a rough time. He's had one day off, and that's just to visit his mum, who's not going to be with us much longer. Sorry, guys.
So anyway, putting the personal stuff aside, because you know, we've still got to try and function, but we've been trying to juggle running our normal business, dealing with what the government's throwing at us with all this stuff, and trying to help you guys, educate you guys, and help you come out the other side and work with you guys, plus deal with whatever we need to personally. We're doing the best we can. Our response times are a little bit slower than normal, and our communication's probably a little bit slower than normal. But rest assured, we've got your interested hearts, and I think it's really important that at least after Wednesday, you activate as much as you can to get free cash, and then use your trusted advisors together with the cash to strategize your way through and come out the other side bigger and better. Because I can see that a lot of our businesses may look slightly different or drastically different, but will be bigger and stronger and ready to attack. And who knows what's on the other side, but we've just got to get through this period as best we can.
Our little hashtag is support each other.
And yeah, we're here to support each other, right? And we're all doing the best we can.
And I think Gracie's got something she wants to
hang on, before I get into that, one thing I also wanted to mention is all our people who have been clients with us for a period of time would know that normally about now, we would be doing tax planning consultations. Now, for those of you who don't know what I'm talking about, tax planning consultations is where we sit down, look at your current year's figures, extrapolate out for the financial year, and see what strategies we can implement between now and 30 June still to minimise the tax liability. Now, okay, the last quarter is going to be affected, your figures, but even with a different last quarter, it's still possible or highly probable there's still going to be a tax issue for this year. So tax planning is still very important, and it's always been an important strategy that what we do with clients. But we would normally be doing that about now, about April, May. Because of the coronavirus and the implications and all the government stimulus and everything else that's been thrown at us, what we've had to do is put the tax planning back a little bit, because people don't care right now about tax planning. They care about getting through this, what strategies, what can we get cash flow? They want to get through this. So our focus is primarily on this, but we will still be having tax planning, but those sessions are probably going to be where they would have been April to mid-May. They're probably going to be May to start of June to mid-June, because this is far more important in terms of...
people aren't going to really know their numbers totally till then too.
It's true. The numbers are going to be affected, plus the focus for everyone's not on that at the moment. So bear in mind, we're still going to be doing tax planning, but it's going to be pushed back. Yeah, so this year, we're probably going to be having 2 lots of consultations with our businesses. The primary one's going to be, we're going to be getting in touch with you all late this week to start having consultations, and start of next week to start having consultations one-on-one about these measures and what you can do. And then we'll get through that. We will do as much of the shouldering of the load on this as we can, and do as much for you and be the biggest support we possibly can be. And then later on, we'll be worrying about tax planning. So just wanted to warn you, it's going to come a lot later than normal, but that's just the way it is this year. And so now that's it for me, and our details are there, our website, our phone number, and email address. Any questions about anything, please feel free to contact us.
That's clients. Okay, so Grace, you've got something you want to share too.
I do. So as Adrian and Nita were speaking about, it's really important for us and for everybody to really support each other and get around each other at this time. I think all businesses are really struggling, regardless of whether you've been able to stay open or not. So one of the ways is that we're trying to support everybody here, beyond just our clients and what we usually do for them, is giving access to everybody, Adrian, to everybody through these webinars. But another concept that we've decided to do is we've now created a Facebook group, which we've called Superior Accounting Groups VIPs. So we encourage all of our clients to click onto the link. I'm going to pop that into the chat box for you to access, and follow that and join our group. And the intention of this group is to allow not only all of you to post your questions, your wins, what's going on, and hopefully other business owners can assist you and will be popping into the group. along with some of our guest speakers and specialists. They're going to pop in as well. And we're going to try and do a bit of some live videos and share some resources. But yeah, it's just, we're wanting to create this environment and this community where people are going to be able to support each other and get around each other, offer advice, and just help each other out as they can. So we really do encourage you all to, to join that one. The other thing is that, as they also mentioned, we're going to be hosting another webinar on Wednesday. There'll be quite a few coming up along the next few weeks because there is just so much content to cover to try and help you out in regards to the stimulus package and trying to pivot your businesses to work with this current situation. So stay tuned to the social media. So connect with Adrian on LinkedIn if you haven't already. Follow our Facebook page. Request an invite to the group as well if you're a client. And stay tuned to your emails as well. So we are going to ask you to register for these webinars just so we know who we're talking to, basically. Otherwise, it's a bit of a blank slate for us. So I'm sorry if it does get a little bit annoying and repetitive putting your email and name in, but it just means that you get all the links to join and you get reminders and all that kind of stuff. If you do have any questions through it all, obviously you can contact us through any of those mediums, but we really do look forward to seeing you guys across the next few weeks and helping you out along there.
Yeah, I think that's it.
And I would encourage each of you who are on this today to try and get on the Wednesday one, especially because there's going to be a flow on. There's going to be a flow on of continuation of cash flow things covered, and I think it's really important that you further your knowledge and do that then. And look, on behalf of myself, my wife Anita, who's sitting here, and all of my team who have also given up their time tonight, I do appreciate all of you giving up your time out of your busy schedules to listen to me prattle on for an hour and a half. And I do hope that I've provided you some useful content that you can run away with now and start analysing from a personal level.
And share guys. We're all about supporting each other.
Yeah, I'm happy if you share this with whoever you want, because ultimately we're all helping each other. We all help each other. We all win, right? So it's about creating wins for as many businesses as we can, and we all come out healthier and better the other side of this. So thank you so much for all giving up your time, and I will hopefully see the majority of you on Wednesday's recording. Until then, have a safe evening and good night.
Night.